From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day, welcome to the COB on this Tuesday. Somewhat of an eventful 24 hours we're in the midst of at the moment, given we've just had the RBA decision, leaving rates on hold. That was expected. What is unexpected is the result of the US election with voting. Well, it's already started. The results, well, polls due to close tomorrow morning our time, but speculation that there may be a long wait before we get a definitive result. All right, let's take a look at where we're at. The local market there, just bumping along at that level over the afternoon session to be close 0.6% lower on the CBO 200. So those themes of the day, a hold. Yes, hold it. That's what the RBA has done. Very much expected. Was about that accompanying statement, but to be frank, and we'll unpack this in just a moment with Mun Crab, but not a lot of change from its previous statement. The Trump trade wavering. We've seen that on markets across the globe with opinion polls indicating perhaps Kamala Harris has improved in the overall standing there, with a bit of a surprise, in fact, in Iowa, which is very much a red state. Looks as though she is now pulled ahead. And fresh toppings, well, that goes to a change of leadership at Domino's Pizza. All right, let's get across those sectors that are moving. The bank's proving to be a bit of a drag on the overall index there, as you can see. Westpac and Macquarie, the heaviest losers today. Elsewhere in the energy space, broadly lower. Interesting, actually, some of the biggest movers in that space were the uranium miners, technically in energy, and that's off the back of a regulatory hurdle that Amazon has hit in terms of drawing more power from the 3 Mile Island nuclear plant in Pennsylvania. Healthcare, taking a look, that is just a little mixed with CSL off more than 0.5%. So let's get to those top stories of the day. Domino's Pizza initially rose and then slumped, has recovered a little since then though, but that's after Chief Executive Don Meij announced he would be leaving the company after 22 years of leading the business, noting still weak same-store sales in its latest trading update, covering the first 17 weeks of the new financial year. Elsewhere, Lifestyle Communities, it rallied after HMC Capital established a stake in the company. And Mineral Resources bouncing back after tumbling yesterday on the news that billionaire founder Chris Ellison would be stepping down within the next 12 to 18 months after the board found he'd used the mining company's resources for personal benefit. All right, so lots to unpack. Let's get to it. Martin Crab joining us from Shaw & Partners. Martin, well, you came in here a little underwhelmed, I feel, after the latest statement from the RBA. What did you make of it?
Yeah, well, it's kind of hard to talk for 40 minutes about having done nothing. And a lot of the questions were just trying to bait the governor into giving us some sort of guidance about when are you going to cut, when are you going to, did you discuss hiking, what are you going to do? So, yeah, it's just a big nothing burger. It's kind of consistent. Like, no one expected them to do anything, but then we want to spend like 40 minutes talking about it. So, yeah, just sticking with this. Inflation's still too high. Inflation's still too high. It's not in our band. We're not ready to go yet. The market's still pricing in. Well, the economists I follow are saying February next year, but they're also saying there's risk that that's going to be pushed out a bit. And it all comes down to this CPI number for the debt quarter, which we're going to get in January. So they're not going to do anything in between here and there. There's a board meeting in February. Maybe they cut then, but it's all to do with how resilient the economy is.
Do you think we can categorically rule out any prospect of a rate hike from this point on? Because it's still in the statement, it says it's not ruling anything in or out.
Yeah. Look, that's just a free option for them, right? So if something comes along, some exogenous shock like a big move in the oil price or something crazy like that, and it kicks off another bout of inflation, then they need to keep their powder dry. So they don't want to say we're never going to hike, because that would tie their hands behind their back if there was something they had to respond to, a big wages outbreak or something we just can't see. So they're not going to rule that out. But yeah, you can pretty much put a line through. 99% of scenarios, rates can't go higher than where they are. They can only come down. And she did get asked that. Surely the next move is down. She's not going to say it is, because you want to keep the free option.
where you speak of those potential shocks. The US election. Look, it's impossible to know, isn't it, the outcome of this, and you get the sense that we're not going to know for quite some time.
No, it's so close. The polls are so neck and neck. There's a website that looks at every poll, and it looks at the ones that are funded by the Republicans, ones that are funded by the Democrats, and ones that are independent, and it's literally 50-50. Even the sports betting, which I suppose is real money, that's 52-48, and a week ago it was 48-52. So again, that's, and those people who've analysed the political system in the United States saying, look, if you really break it down, the last two elections were a handful of votes. We're looking at 60, 70,000 votes out of 160,000 potential voters. These are, minuscule fractions, Andrew. So, polls close, 10-ish our time tomorrow?
Yep.
And then we'll just watch. We'll all have our screens on. We'll be watching AusBiz, getting live updates from you guys on what's happening, right?
Yes, it could be a long wait and a long watch.
Yeah.
What did you make of those market moves, though? Because there's certainly the past 24 hours, 48 hours, the so-called Trump traders unwound to a degree.
A little bit, yeah. So we do some correlation analysis. So look at the US stock market, look at gold, look at interest rates, look at Bitcoin, and look at the currency, and they're all positively correlated with the probability of Trump winning and negatively correlated with Kamala Harris. Now that could just be coincidental, but my read is that one person's going to bring in a bunch of tariffs and the other person's not. They're both going to spend the same amount of money, so the fiscal response is the same, but Donald Trump has said 60 on China and 10 on everywhere else. That's inflationary. And that, I think,
he's threatening 100 on Mexico.
Yeah, or and on Europe, he wants to have a trade surplus with Europe. It's like, well, that's going to be a bit of a turnaround from where it is at the moment. So you kind of look at that and go, that's all inflationary. And so that's what the bond market and the currency and Bitcoin and all these other assets are responding to, is a higher inflationary environment. So with that Iowa poll you mentioned earlier, Andrew, coming through overnight, there was a rally in the bond market. So the bond market's been selling off for months and months and months now. So there's the correlation. So it's pretty good, as you can see. The odds of Trump winning, or the money you get back from, money you have to bet to get $1 back, is the black line on the left axis. On the right axis is the 10-year bond rate. So a big sell-off in Trump in the past sort of 24, 48 hours, and the bond market's rallied. It hasn't rallied a lot, but that's a pretty good correlation. It's about a 70% correlation between the two. It's not coincidental, I don't think.
So do you think the worst the worst result for the market would be a contested, protracted result that was disputed? Other than that, a clean sweep, which would appear highly unlikely as far as the Democrats are concerned.
Yeah.
What if the Republicans managed a clean sweep in both the White House and Congress?
Yeah, and you hope the president doesn't get sentenced in 3 weeks as well, right? Because he's up for sentencing at the end of November. So, look, I mean, I think, trying to be dispassionate about it, is that the bond market will rally if Kamala Harris gets in, because she's not as inflationary as Trump, and I think that's one read. So you might get a rally in the bond market. Will that push the equity market higher? I'm not sure. The sell-off in bonds hasn't really hurt the equity market. It's just kept going up. And a very narrow Kamala Harris victory means that Trump contested in the courts, so that's ugly. In fact, probably getting a strong, resounding victory by either party would be positively responded to by the market, because it removes the sort of post-election uncertainty of what happens now. I mean, I think most people in America would prefer purple, so we get red in one house and blue in the other.
Yeah.
So I think that's probably the muddle through sort of thing. Is you get Trump in, but the Democrats control the House and make it difficult for him to do crazy things. So I think that's what's likely. Having said all that, Andrew, I mean, if you look at the impact of elections on markets, it's a bit of a nothing. We get very head up about it, and we try to talk about what's going to win or lose if president gets in or not. But there's so many other things going on in the world that the election it's not that important factor.
Too much to watch at the moment. That's the problem, Martin.
That's right.
Well, let's come back to the local market then.
Yeah.
What we're seeing here. Let's take a look at the banks. They were, in fact, the worst performers today. What are you seeing?
Yeah, so we've had Macquarie last week. Not traditionally compared to the savings banks. We had Westpac on Monday. We've got ANZ on Friday and NAB on Thursday. Obviously CBA is the deck balance, so we're only going to get a quarterly from them. So Macquarie was downgraded 5%, Westpac was upgraded 5%, and that's the only move in earnings estimates we've seen from the banks this year. But if you look at share prices, I mean, Westpac, which is the green line there, that stock's up 40% this year. In fact, even the worst performing bank, which is ANZ, is up 20% this year. There's been hardly any change to earnings estimates at all. So all of that is on PE ratios. So we're just paying more for the same amount. So you would have thought that with a 40% rise in Westpac share price, that the earnings have been upgraded strongly this year. They haven't. If anything, you know, the market's very underwhelmed. So you can see there, I think, yeah, Westpac in the past couple of weeks has been upgraded a little bit, but you're looking at, you know, less than 10% earnings upgrade and about a 5% downgrade. So this is not an earnings story. This is all about risk and confidence and chase for yield and all the hot money. So it does really, really stand out as a very overvalued sector. If you look right across the index, you can see, you know, that Commonwealth Bank on 25 times, NAB on 18 times. These stocks screen really, really expensive. So it's one part of the market we're just telling people to be very nervous about. When you're seeing prices like this, you know, they are priced for perfection. At any sort of weakness, any sort of bad news, these stocks would come under pressure. They have really massively outperformed their earnings. And when you see that, when you see PE expansion like that without being backed up by a better earnings story, you just have to be cautious.
Elsewhere, what is it about personality-driven companies at the moment? We've been through WiseTech, Mineral Resources.
Yeah.
Today,
Yeah.
Domino's Pizza, Don Meij, stepping down.
Yeah. So look, a little bit coincident there because ahead of their AGM, they came out with the fact that he's retiring. He's been at the company for 40 years. He kind of started delivering pizzas, right? He's the classic start on the bottom and work your way up to the top. But after 40 years at the company, 22 at the helm, he's chosen to retire. But the timing is not great from the market's perspective because they also downgraded earnings. Well, they didn't downgrade earnings. They just said they're still struggling. After 17 weeks of trading this year, same-store sales are negative, and they also called out that Germany's a problem, but more importantly, Japan and France. So they're the two problem children. Everyone's been looking for a turnaround there. They've changed management, they've changed strategy, and they're still not performing. So the whole story about Domino's is for decades it's been a fantastic execution of the Domino's master franchise. So they own franchises in Australia, New Zealand, Japan, Germany, Holland, Belgium, a whole lot of places, and they've been the go-to to go and fix countries that aren't working. They've had 12 downgrades in a row now, Andrew, since 2021. So that's the 12-month forward earnings per share estimate for Domino's Pizza going back to 2021. We've gone from $2.70 to $1.50 in terms of forward earnings, and there's been 12. So today hasn't counted because the analysts will change the numbers tonight. 12 downgrades in a row. So this is a company that has, you know, beaten estimates for 20 years and been one of the great Australian growth stocks. For the last 3 or 4 years, just downgrade. It's gone from 160 to 30.
So you're saying a new topping is not going to help?
Well, they've brought in new management. You've got to change it. It's like a football team that just keeps losing. You change the manager. Ultimately, you have to change. You have to make some changes. They can't just keep saying the same things. Yeah, we're going to fix France. We're going to fix Japan. It's time for a new broom. And I think the new CEO, background in Coca-Cola and Compass Foods, you know, time for a new manager like Manchester United, right? The guy keeps losing. He's gonna get changed.
Well, of course, America are about to get a new manager.
Exactly.
Almost impossible to pick a winner. Did you pick a winner on the big race today?
No, I don't think anyone was on that thing, were they? I didn't hear too many cheers when it won. Normally when the thing gets up and it's 70 to 1, someone's going berserk somewhere. I didn't hear anything.
We're all a bit distracted at the moment. Martin, great to catch up. Thanks for joining us from Shaw & Partners. All right, let's now get to our stock of the day. James Hardie. This is all off the back of a, potential Trump trade, I guess, the outcome of the US election. Assessing that, Sean Hickman from Market Matters and Rudy Philip Van Dyke, I should say, from FN Arena.
We think that James Hardie is a top quality stock, but I would be buying it on the back foot. I wouldn't be saying it's a buy here. I like it into the back foot. So you buy 10% here, 20% lower, 20% lower, sort of accumulate into weakness. It is more of a macro play on bond yields, and at the moment, I don't see any signs that bond yields are going to roll over, although I do feel we've gone from bond yields were as good as it's going to get and how they were factoring in rate cuts only maybe 4 or 5 weeks ago, Now I think they've gone 180, and bond yields are looking a bit too hawkish. I think somewhere in between the two is the right place, which means that stocks like James Hardie should improve. There'll be a lot of volatility the next week.
As you see the price chart, that makes it extremely volatile at times. That is good for people who want to get in the stock. It's a bit less comfortable when you're in the stock already. And I mean, you can't just always throw money at it when weakness appears, because then it becomes just too much of a leverage in your portfolio.
So that was actually a hold and a buy there from Sean Hickman, hedging his bets. Rudy there slapping a buy on James Hardie. All right, let's catch up where we're at as we wrap up the day, and the market leaders, their lifestyle communities off that stake that bought into the company. They're pushing the price up 8%. Chalice also on the move. Mineral Resources bouncing back some degree after that heavy loss yesterday. Pilbara Minerals also in positive territory on the negative side. Domino's off the back of that news that Dom Meij is stepping down. Strike Energy, it's been pretty volatile of late, and among the losers there, Paladin Energy, the uranium miners under pressure today as well. In the small cap space, Avita Medical up 11%. Appen also continue to rise, which has making somewhat of a recovery after a couple of years of woe, of course. Elsewhere, on the negative side, St Barbara, goodness, down 25%. Xanadu Mines and elsewhere in the resources space, Diatrim, while Frontier and Empire also losing out today. So, ahead, and it is a big one, the US presidential elections. So voting does close 10 a.m. Eastern here in Australia tomorrow, but predictions are that this is going to be a protracted outcome. Elsewhere, do get a US read on a trade balance there for September, and the services index, ISM, for October. And closer to home, New Zealand, the unemployment rate will be revealed, and Japan, the Bank of Japan there, will meet and reveal its latest policy outcome. So, to the local markets, this is where we finished up, almost 0.6% lower on the SIBO 200. A very eventful 24 hours, as I mentioned. We'll be right across it again tomorrow, particularly as those US results start coming in, and the implications clearly from an investor perspective. Thanks for joining us. Thanks for listening and watching COB.